G'day and welcome. So today I thought we'd bring in a guest. His name is John Black. He's the CEO of Aldebaran Resources. And this is a recent addition to the mining phase one portfolio. So welcome, John. It's great to have you here, and we're looking forward to getting some insights on the company.
Great. Thanks for the opportunity. Look forward to catching up a bit here.
Excellent. So I know it's late over there in North America, so thanks again for joining us. It's always a little bit tricky, I guess, late in the evening trying to sort of join these conversations. I'm more of a morning person, so it's great that you've been able to join us.
Mhm.
And I guess just to kick things off, could you give us a little bit of a background on Aldebaran? Most of our listeners are based in Australia, so we do have some familiarity with Canadian stocks or Canadian listed stocks, and but it's good just to get from the horse's mouth, so the CEO of the company, just to try and uh, get your perspectives and your background on the company.
Okay, absolutely. I'm an exploration geologist by background. I spent the first part of my career working for Kennecott, Rio Tinto, and Western Mining before it disappeared into BHP. And about 2004, some friends tapped me on the shoulder and asked if I'd be interested in forming a junior company. So when we formed a company, myself, Kevin Heather, who's our chief geological officer, and Mark Wayne, who's our CFO, had to determine what type of a company would be. So Aldebaran's actually the third company we've had in our group of companies. And with all three companies, what we do is we specialize in identifying projects that have the potential to be really large copper or copper gold deposits, the type of a project that a major copper company would like to put into production. So we're elephant hunting. We're looking for very large deposits intentionally. When we identify these, when the prices are low or when there's a special circumstance in the market where a project's available, that we see that potential in the project that the property owners don't see or don't have the capability to move forward. Then we capture the opportunity. Our strategy is to drill it out, show the full extent of the deposit, and then de-risk it through about a pre-feasibility stage. And then ideally, we monetize the project by selling it at that time to a major mining company, the company that would put it into production. We're not mine builders, we're not mine operators, we're good explorers, and we have a lot of experience in the South American Cordillera to identify these type projects. So that's what we stay in our niche, and it also keeps the time frame more in a length of time that's more palatable for our investors. From discovery to production for the type of project we look for now is 15 or 20 years, and that's just too long for all of us to
Yeah,
work through. And as a single asset company, you really don't want to ride the ups and downs that long. So we're looking to shorten that time frame into that first really steep leg on the Lassonde curve where you add a lot of value between discovery and about pre-fees, and then ideally, we pass the baton to a group that specializes in building the project. So,
yeah, absolutely. And I'm an exploration geologist as my background as well. So it is the most exciting phase as a as a someone involved in the industry. I think exploration and that development phase. And I guess just on the Alta project, so just looking at the background, it has changed hands a number of times.
mhm.
So I think correct me if I'm wrong, the original discovery was back in the early 1990s from Rio Tinto.
So
So,
actually, CRA even earlier
okay.
a part of Rio Tinto at that time. So yeah, absolutely, it was in the late '90s they put the first holes into it. Mhm.
Okay, and that's certainly not unusual for these sort of large scale projects as time changes and prices go up. But I guess over that time frame, what do you think is the key reason that's held back this particular project from progressing towards development? Do you see some maybe the depth, the grade, or the jurisdictional risk in Argentina? Is there something in particular
Mhm.
which hasn't seen this project progress up until now?
Yeah. Well, what you pointed out is not an uncommon pattern for these. We're not the only group that has our style of work. If you look at Ross Beatty's Lumina Copper Group, they operate very much in the same way, or the Lundin family as well. And we in many of these discoveries that juniors like ourselves are presenting to the market now, the project often has a 15 or 20-year life. And there have been, in many cases, 2 or 3 companies that have been on it before. In the earlier stages, a lot of times they do just enough work to show some potential, but they don't find the best part of it, and then metal prices go down and you change hands. So it's not uncommon to see that length of time, and that there are several parties that have been on this. This particular project, the history was when CRA first came in and were working on this. It was right as the transition as they more formally became part of Rio Tinto, and their initial drill holes into this project, they like many times with Rio Tinto, they had to compare their projects to Escondida. And so you had a handful of holes to hit it to see if you had another Escondida. They were looking for a 2 or 3% hypogene, or 2 or 3% supergene enrichment blanket. It had a beautiful leached cap, or has a beautiful leached cap on the top, and it looked like it had that potential for that style of mineralization. In the first 6 or 7 holes, uh, hit good mineralization, hit a porphyry system, but didn't have plus 1% supergene copper in it. And so
Yeah.
the decision was made. Keep in mind, this is latest 1990s, early 2000s. Copper was trending towards 60 cents a pound, and it just wasn't big enough. And Argentina was a pretty serious frontier country at the time. And so they made the decision to pass that on to a junior company. So they allowed a company called Peregrine Metals to option the project. Peregrine Metals was run by Eric Friedland, Robert Friedland's brother. Came in, they did an excellent job. We knew the guys well that were working on the project. We were working on, our first company was called Antares Minerals, and we were drilling out a discovery in Peru called Akira at the time that we sold the first quantum successfully. They were working on this and drilling it out. And in 2011, Peregrine Metals sold the Altar project to Stillwater Mining for $487 million consideration, which was a tremendous success for them. So in many ways, this is not a new project. It's a project that's been around. It's actually a junior has done just what we try to do on projects with this one once. But the acquisition of the project by Stillwater was viewed as a misstep in many ways. And the price they paid was right in line with what was being paid for other similar assets. But it was earlier stage. It was in Argentina, which wasn't a mining country, was not an easy country. It was an easy country to explore and not an easy country to build a mine in and repatriate profits at the time. And the project never fit with Stillwater. Stillwater was a platinum producing company that had suddenly put their hands on a big early stage copper opportunity in the Andes, and the shareholders weren't too keen on it moving forward. So it got stuck in the wrong company moving forward. And we were monitoring it. We weren't the only group that were watching it. We keep our eyes out for these type of targets. And we heard about some additional results that were coming out. They were quietly exploring it, not talking about it too much, and not publicly releasing the results. And we quite frankly heard about it at a beer night in Santiago, which where industry regulars used to get together once a month in Santiago and trade stories about projects. And the team working on it made a short presentation, and were announcing new discoveries that weren't known about. And we realized, wow, this thing, we knew it was big and moderate grade, but it looked like it could be much larger. And so we kept our eyes on it. And the key thing for us was that Sibanye purchased Stillwater for their platinum mine in Montana. And this was marked as a non-core asset, marked for disposal. And they gave all of us that were looking at it 60 days to make an indicative offer. And the presentation we made to them resonated with them. So a project that had been purchased for almost $500 million, another $50 million of work into it, over 120,000 meters of drilling. We struck a deal where we can earn an 80% interest in the project for $15 million in cash payment. We awarded Sibanye a 19.9% equity position in Aldebaran, a new company that we formed to take this on. And to get to 60%, we needed to spend $30 million in the ground. We've completed that. We now own 60%. An additional $25 million in the ground gets us to 80%. We've actually just completed that. We're in the process of documenting that, and that'll be announced shortly. So we effectively own 80% of the project now
Okay.
for 15 in cash and work that needed to be done in the ground. So it was a great deal for us. And we weren't simply picking the project up to pick it up on a downturn in the market and then wait for better market conditions to represent it. That was clearly an opportunity there, but we felt there was also an opportunity to significantly improve the project and show that there was considerably more there. And that's what we're really excited about right now. Our work over the last couple of years has proven up an entirely new discovery on the project.
Yeah, absolutely. And I think that's really key, though, is to be able to pick these sort of projects up at a sort of cyclical low in the market. And I think that's how great companies are made when they do sort of buy these sort of counter cyclical assets when prices are far more attractive. And I think that's could sort of pay off long term. But in terms of I guess Argentina and just the sort of junior mining copper gold space more broadly. And we've seen a recent bid from BHP and London Group on Corp. And I'm just wondering how that might potentially change the landscape for companies like yourself who are looking to attract a major's attention. And it's also in Argentina. So just seeing how that development is perhaps sort of being factored into your sort of future planning.
Well, I'd like to say we anticipated the change. We didn't. We saw things improving overall, but it's dramatically improved with the arrival of the new Malay government. So Javier Malay was elected as president late last year, and he came in with a platform that Argentina, under the Peronist governments that had been in charge for decades, were essentially just running the country into the ground. Inflation out of control, no reason for foreign companies to make major investments into the country, no stability on fiscal matters or a stable platform or a reasonable tax structure for us to invest in. It was a great place to do exploration, a relatively cheap place to do exploration, and the rocks were right. It's the same cordillera that hosts all the copper deposits on the other side in Chile. It just there was no real reason for major foreign investment, this type of investment necessary to build big mines. So there were quite a number of projects that were interesting that were in the country and just waiting for different conditions to go forward. And so when Millet came in, what he's done is he was very transparent when he ran for election. He said that he would be making radical changes that would cause a lot of economic hardship for the average citizen in Argentina, and that people would have to stop living off the dole and having heavy government support on everything, and they'd have to stop printing money and just having runaway inflation in the country. And he's taken very hard steps to make that. Most recently, about mid-year, he announced a whole package of investment incentives that are referred to as the RIGI package. So significant things like moving the tax rate from 35% down to 25%. More importantly, opening up the ability to move funds in and out of the country without controls on those. It was, as I mentioned, it was easy to get money in the past. It was very hard to repatriate profits and take it out. So, and that met with almost instant support from the industry. So BHP announced the nameplate on that's $4.5 billion for that investment to come in as a half partner on the Filo project and the Jose Maria project. Um, that made great news in our space on that. That's a big investment for our space, and one of the first purchases of a pre-development asset in our space. There have been recently a lot of M&A happening in the copper space, but it's been buying producing assets
Mm.
and or consolidating ownership of districts. This was one of the first moves towards buying a pre-production asset. That and the recent sale of Rex Minerals in Australia we view as two very important steps the M&A market maturing into the space where people are buying assets to subsequently build and move forward. So huge important step for us, but not the only one in Argentina by any means. We've seen this week that Rio Tinto's announced they're buying our Arcadis for their lithium assets, many of which are in northern Argentina. We've seen major investments in oil and gas announced. The same week that the $4.5 billion investment was announced by BHP, Petronas announced a $30 billion investment in liquid natural gas in the southern part of the country. So these are very important steps and very indicative of the potential that's been frozen in place in Argentina, and that these changes are opening up a tremendous opportunity in commodities. It's not even just mining; it extends into agriculture and other things. So this is opening the door for potentially an incredibly important transformation on the economy of Argentina, and that's it's a great spot for us to be in right now. It's drawing. San Juan, the province we're in, last year there were 65 drill rigs working on copper exploration stories, and there would be more if there'd been more rigs available. It's a hotbed for exploration right now.
Now that's really interesting. And what you say, I guess, with the geology, it is extending. It is essentially the same geology in Chile, which is host to the world's largest copper resources. And I guess if investment has been held back for a number of decades in Argentina, it just makes you wonder what sort of potential is there on the other side of the border, with that same sort of geological setting. And I guess Argentina has been making inroads into its lithium mining, but there's
Mhm.
still plenty of development opportunity in the copper gold space, which is I think really exciting for the country. But then just going back to your project specifically, so
Mhm.
Alta, it is certainly one of the larger undeveloped copper gold projects out there. Um, but just in terms of attracting sort of the attention from one of these big players, you say that's your strategy with the
Mhm.
company to not develop yourself, is to bring in sort of or not even a partner to sell off the asset. So I guess scale is always a critical factor in attracting the attention of a major player. We've seen that with Philo Corp. So I guess the company has a new resource in the works, from what I understand. So it plans to release that before the end of 2024. I'm just wondering if you can sort of offer some other insights on just the potential economics here, which might be attractive for one of the majors to pick up this project, and just maybe walk us through the positives and maybe some of the challenges which are specific to Alta.
Certainly. So as I mentioned, we already knew it was a large deposit. So shortly after we acquired it, we put out a resource as kind of the before look, or as we were starting on the project. And that resource is about 1.4 billion tons at about a 0.5% copper equivalent, which is 90% copper with a little bit of gold and moly associated with it. So it's large already, but moderate in grade. And so that's one of the challenges that we face is grade. And one of the best ways to overcome moderate grade on a deposit like this is to make it very much larger as you go forward. One of the things I think you'll appreciate on this project as an exploration geologist, one of the things that caught our eye when we looked at this project was the work that had been done was well done. It was great drilling, everything taken care of well, all the assays were done properly, but they effectively just sat up and grid drilled the project. It's the high Andes, there's no vegetation, alterations visible to your eyes, so it's pretty obvious where you start, and they just sat up on it and drilled it out. It worked well for them on it, but they never really invested a lot of time to collect complete geologic data sets over the whole project. And Kevin and myself, Kevin Heather, our chief geologic officer, and myself are both with backgrounds with big companies. we've learned that you collect very complete data sets over a project to fully understand what it is. And we saw this as an opportunity. There wasn't even a reasonable geologic map over the project completed, and very little geophysical work or geochemical work done on the project. So we completed those large data sets. And one of those data sets we collected was a deep looking IP resistivity survey. It was the first one that had been conducted over the whole project area. And we received some outstanding results. The deposit, as it was known, consisted of two zones, Altar Central and Altar East. So like many porphyry camps, these are a cluster of porphyry deposits that are kind of nested together. And so those two deposits sit side by side and can be captured with the same pit, with kind of a septum or a high point in the pit between the two lobes of the pit. In that middle ground area, Kevin and our geologic team saw geologic evidence that there should be additional pulse of porphyry in there. And the geophysical information, when it came in, it lit that up as being very conductive and very much of interest. And so over the last 3 years, 3 field seasons, we've been drilling long drill holes into the new discovery. We call it Altar United because it unites the previously two known areas into one large cluster, and getting spectacular results. Typical runs are between 600 and 1,500 meters length of zero point 0.5 to zero point 0.6 or even zero point 0.7 copper in some cases. So long runs, a large area of mineralization. We've completed about 63,000 meters of additional drilling, and we're in the process of updating that mineral resource. So the new resource will be out in November, it looks like right now. It's moving along pretty well. We're not really allowed to go into
Mm.
speculating what that'll be, but it'll be a
Absolutely, yeah.
very substantial increase in that, which will make it big. Size for this, one of the metrics that we look at on this is, and there's nothing magical to this, but it does work, is that most of the big companies want to see production of at least 100,000 tons of copper per year and a mine life of 25 or 30 years. That's the type thing they're looking for. And when you use numbers like that, that usually comes back to about 10 billion pounds of copper, or 5 million tons of copper in situ on a project. We're already at 13 billion pounds of copper prior to the new updated resource. So we were already of a size that majors were on their radar. We received quite a bit of interest from major mining companies already, and it's about to get much larger than that. So that draws their eye in, and we're not allowed to give names on, and most of that work's done under confidentiality agreements that they review us. But one way you can see the level of interest in a project like this is we have several strategic partners on this. We have a large fund out of San Francisco that backs us on what we do, but more recently, in the last two field seasons, our funding has largely come from South 32. They came in and made strategic placements and now own just short of 15% of our equity in the company. And that's clearly because they're interested in the project and watching the project go forward. We also have a very interesting agreement with Rio Tinto Newton, a division of Rio Tinto. It's a non-equity agreement, so they don't own equity in the company, but we have an agreement whereby we provide samples to them, and they conduct test work on those samples to see if their new hypogene or primary sulfide heap leach technology will work on this project. So they wouldn't be doing that if they're not monitoring the project
Mm.
moving forward. So we already have eyes of those two that we can mention because of our relationships with them, and most other copper companies that are doing their job and monitoring opportunities out there are closely following what we're doing. So they're very interested in what we come up with. The completion of this resource estimate will allow us for the first time to do a PEA, which will be out in about the middle of next year. And that so I'm not really prepared at this point to talk about um, economic parameters around it until we get that work done and presented. But that'll be a very important milestone. So it's a great time to look at a project like this because we already have the bird in hand, and it's about to
Mm.
get quite a bit larger. But we have
Yep.
those two really key reports coming up: the substantial increase in the resource size, and then the economics wrapped around that by mid-year next year. And those two key things tend to be the type reports that result in a re-rating of a company like ourselves, and it draws in different. Some investors are not comfortable until they see those economic parameters around a PEA. So those are two great opportunities for a substantial increase in value in the company.
Yep, sure. And you did touch on that you've followed up with deeper drilling around Altor. So
Mhm.
I'm presuming here that a substantial part of the resource extension would be coming at depth. Um, does the company have, I guess, a sort of a proof of concept, or just maybe a similar mine that may be sort of tapping into these sort of deeper sort of deposits at sort of similar grades? Just yeah, I guess a proof of concept of what works. A similar project, maybe not in Argentina specifically, just to sort of give you that confidence that it will be economic and suitable for mining.
Yeah, some of the ones that we can point to is just in terms of size and grade, not quite so specifically to the depth factor. And some of this deposit comes quite close to the surface. It's not that we have long runs and we terminate mineralization at depth, but portions of the deposits are quite close to the surface. But this is by nature is more like, say, Quebrada Blanca in northern Chile or Cerro Verde. These are type projects that to become or to best exploit a deposit like this, it probably would be exploited by high volume and a lot of throughput,
Yep,
because you're working with those lower grades on it to
yep,
move forward. And so that would be the most logical scenario moving forward intuitively. But we'll run a whole series of scenarios on that as we get forward. And one of the things, the primary leach technology, we don't feel that we have to have that work to make the project viable. But given the grade sensitivities on this and the strip ratio that would be necessary to get it fully exposed, having a processing technique that is lower capex on it really helps on a project like this. So I don't know how familiar you are with the primary sulfide, what Newton's trying to do, but basically in a big copper deposit, there, in a simple sense, there are two styles of mineralization. Near the surface, where you've had some weathering, you get secondary oxide minerals or secondary sulfide minerals that have been modified by weathering processes. That type of mineralization you can process by heap leach technology. So you just take the rock, you crush it, you put it on leach pads, and you leach it with sulfuric acid solutions, and you produce pure copper cathode on site. So it's a very low capital cost, very low operating cost, cheap way to produce material from that. However, the underlying primary or unweathered copper mineralization has always required milling and flotation and concentration, and then you sell your concentrate to a smelter, which is probably on the other side of the world, and you have to deal with tailings. And so it's just a much more involved process and a much more capital intensive process. And the mine has to support all of that capital. So then you're looking for better grade or lower strip to do that. And so when you get in a situation like Altar, where we have moderate grade, a lot of it, but moderate grade, and we will have some strip to get to material on it, then you're looking for ways you can keep that capital cost down. So what Rio Tinto believes they've done is they believe they've successfully developed proprietary technology to modify the SX-EW process to make it so that you can heap leach the primary sulfides and avoid building a mill and going forward. And so if this works, it's a much lower capital cost to build the mine, and then it sort of inadvertently tripped on some really interesting ESG benefits with it as well, because this style of technology would use a lot less water, and it uses a lot less energy per unit of copper produced. So it's great that copper is viewed as a green metal that's necessary for a lower carbon future, but mining copper is still carbon intensive. And so it puts the big mining companies in a bit of a bind because they're trying to reduce their carbon footprints and be more green, but they're by nature it takes a lot of carbon to get metal out of the ground. So if this technology works, it'll be much better. It also produces, you don't have tailings, so you don't have to worry about the safety risk or the risk associated with tailings impoundment. You also produce pure copper cathode in country, so there's a value add captured in country that's viewed very favorably by the government, and so it has some tremendous benefits if it works. And so that we're very aggressively pursuing that with them. They're working closely with McEwen Mining at the Los Azules project, which is 50 kilometers north of us, looking at the same type of technology to apply to that mine. So it's a pretty exciting space for us on our project itself, but I think it's also a space to watch in copper production overall, that if this technology works, then it could open up the development of quite a few new mines. It just makes it more attractive to develop a mine, less at risk, less capital involved.
Yep, no, absolutely. No, that's really interesting. Alrighty, John. I think that's probably it for today. I think you've given us a good recap of the company and just where your sort of uh, direct sort of um, uh, targets, what you're planning for the next 6 months. Are there any sort of closing remarks that you just want to throw in? What your focus? One thing I didn't ask was exploration. Is there um, any sort of focus on exploration over the next sort of 6 to 12 months? I know you're probably shifting more to a resource and just tying or tightening up
Mhm.
that geological model. But is there still exploration on the horizon?
I'm kind of chuckling to myself on this because it's a big battle within the company. We're exploration geologists by background, and our exploration team is dying to test some additional targets we have on the project. But when we look at it in more of a business sense, we have no shortage of mineralization, particularly with what we're about to announce. And so you hit it right on the head. It's really important for us now to move towards showing the economic viability of what we have. We don't need to have more mineralization for this to be an attractive mine. If we're finding new material now, it'll be in year 40 or 50 of a mine life,
Yep,
and by the time you time discount that, it doesn't change the net present value of the project. It's great to find, and it is important to the big companies to see projects like this that we call them multi-generational mines. They're the type of mine that will go for 50, 60, 80 years.
mm,
And those are important to the big companies, but they don't necessarily pay for year 30 on. So that
mm,
you really need to make sure the front 30 years of this are the most economically attractive as possible. So we'll focus towards that. We'll continue to work up those targets, and we'll leave them there as blue sky. But and we may take a shot, or if we see something that has higher value ore that can move to the front of the project and add value, we'll do that. But we'll really be making that transition into what we consider the de-risking of the project, the feasibility level work that shows now it's big enough. Now we need to show what the mine will look like. So
yep, absolutely. And I think your pre-feasibility, you've got that sort of slated for 2026, I believe.
yes,
Is
that's
that
correct, which is fairly aggressive. But one of the benefits we have on this project is because there was already 120,000 meters of drilling when we started, and we've put in 60 more, is that we have a good drill density over most of the project. Our current resource, 87% of it is measured and indicated, so a higher degree of confidence. When you do a PEA, you can use inferred mineralization, but when you go to a pre-feas, you can only use measured and indicated. So a lot of times that jump as a junior from PEA to pre-feas takes longer and costs more than any of us imagined, because there's just a lot of drilling, infill drilling, that's necessary. Much of that's done for us. So
Yep,
we feel that we'll be able to do that. And we want to capture this pretty exciting window in Argentina right now, when there are great tax incentives out there, and there's going to be a lot of competition to see who can get their project in first. And we want to be in that queue right now.
yep. Excellent. All right. Thanks, John. I think we'll close it there, but really appreciate you coming on board and just giving our listeners a broad overview of the company. So thanks again.
Certainly keep an eye on us. As I mentioned, we'll have those two really important studies coming out. A lot of good news flow on that, and just watch Argentina. It's going to be a fun place, and I think the copper space in general is going to continue to have the type of news we saw with BHP and Filo recently. So
Excellent. Great. Thanks again.